I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again, our old regular master trader, that's what I call him, professional trader, Gregory Mannarino at traderschoice.net. Gregory Mannarino, thanks for joining us today on USAWatchdog.com.
Greg, it's great to be here as always. Thanks for having me. I appreciate it.
Well, we got 0.2% growth. I was almost getting 1.5%. They were predicting 1% growth. And they came in at 0.2%, the latest growth or non-growth figures. I guess when you factor in inflation, we are negative. What do you say about this massive 0.2% growth? And how does it play in with your investment theme that you've been talking about, that they won't be raising interest rates?
Well, Greg, I don't think this is a really big surprise here. Forever now, people like you and me, a lot of other guys and girls, have been trying to enlighten people that we're going nowhere. We're going nowhere. We got consumer spending falling off of a cliff despite the promise that we heard from the mainstream that, people were going to be saving cash at the pumps and they were going to be spending it on other things. I said this was never going to happen. It doesn't make any sense to me anyway. We got manufacturing falling off a cliff, exports falling off of a cliff. We're in decline. There's no doubt about it. And they're blaming the weather. They're blaming everything they can think of, to try to get people to believe that, this is just a temporary thing. This is the new norm. I don't understand how people can believe the nonsense anymore that's being force-fed down everyone's throats by the mainstream. This is it. The new norm is what we have. And I'll tell you, Greg, what really bothers me, I think, more than anything else, at least right now, we have wages which are remaining stagnant. They're not going anywhere. We're seeing prices rise across the board. In my opinion, we are in a new housing bubble. And why would I say that? It's a pretty basic concept, and we could look at a lot of assets and put the same perspective on it. When any asset, housing, the stock market itself, an individual stock, whatever it might be, rises above a level that the average person can afford in this environment where wages continue to remain stagnant, we're in a bubble. I mean, this should be no surprise to anyone. I know you get it, and I'm more than certain your listeners get it too, but this is where we are now, and something has to give. We continue to see, again, bad economic news, more bad economic news being spewed out, even out of the mainstream, but the stock market keeps going up. Housing keeps going up. This is a setup, Greg, for a massive downside move with asset prices, which have been distorted and continue to be by world central banks.
What do you make of the, meeting last week at the Fed where they kind of just forgot to give any guidance whatsoever, which to me looks dovish? I mean, you were saying for a long time they can never raise rates. The Fed can't. I mean, the market will eventually raise the rates on its own, but the Fed can never raise rates. Does that play in with your scenario? What do you make of this meeting where they didn't talk about, again, raising rates again? They just kind of took away the guidance.
Well, yeah, that's exactly what they did. They took away any reference to a calendar date. We kept hearing, oh, it's going to be in June. Oh, it's going to be in September. Now it's like, well, everything is data dependent now, and every meeting is considered live. Whatever that means. I mean, it's unbelievable, really, in the grand scheme of things. They keep moving goalposts. They can't do this. They clearly understand that in this environment, again, going back to what I said, where wages are remaining stagnant, things are continuing to rise here, asset prices, because they're in a bubble. Look, let me put a perspective on this for people so they can understand. What we have is not just the Federal Reserve, but we'll keep the Federal Reserve in the forefront here. What they're trying to do has to have ramifications. There has to be a cause and effect. Okay, so when you have world central banks, Federal Reserve here, that is getting into the debt market, manipulating the debt market, it's going to cause distortions everywhere, and they have to contend with these distortions. One of these was the speculation about the stronger dollar. Look at what happened to the U.S. dollar the past several months. You and I have spoken about this. I've spoken about this. The rise in the dollar was purely on speculation that the Fed would be raising rates. Now, I believe we just hit a top with regard to the U.S. dollar. In fact, I called it on my Seeking Alpha blog, on my own market report. I said, this is it. We're starting to see the dollar pull back. We're seeing commodities go up. I think we may be at a new bull run here with regard to metals, but the dollar has to correct here. It has to correct. It went up on speculation there was going to be a rate increase. It is going to come down because there's going to be no rate increase. So that's a very interesting take, I believe, as we move forward.
So the Fed knows what we know. They know the economy's decelerating. They don't listen to the mainstream media to get their news, really. They may put out disinformation, but they know the real numbers. They know the economy is spiraling downward. Is that correct? And if so, they know they can't raise rates. Is that your take on this?
Greg, my take is this. The Federal Reserve is trying desperately to remain credible to this market, to make it seem like they are in control. They are absolutely not in control. At least at this particular time, the world central banks are so desperate now to keep the system propped up. They have literally turned the entire financial system upside down. What do I mean by that? When you have central banks that have gone negative, which the Federal Reserve will do at one point before they let this thing actually completely melt down, this is not the way the system was designed to work at all. So this should show us all how desperate they are at this time here. Look, their alternative is they have no alternative. If they stop doing this, if they were to start tightening monetary policy, the entire system will come down. I don't even care if they nudge it a quarter of a point. The whole thing is teetering on a knife's edge. And all we need is one event to push this over here, Greg. So the Federal Reserve is stuck in a real spot. And I believe as we move forward, when people start to get the gist that the Fed cannot raise rates, that's going to be a big deal, especially in the debt market, which I tell everyone to watch the debt market. Forget the stock market. It's the debt market which we need to watch, because this next crisis is going to be a crisis of debt, crisis of currency. It's not about like last time was more the credit bubble. This is a completely different animal, much more dangerous.
Why is it more dangerous? The credit bubble and the debt bubble are two different things. Explain, why is this more dangerous?
Okay. The last bubble that we had up to the 2008, that was basically fueled by people who had equity in their homes, using their homes as piggy banks, and, going out and buying things, taking out 2 and 3 mortgages, getting easy credit, inflating that bubble in housing, a frenzy in housing. This particular time, we're not seeing that. We're not seeing that type of a bubble. What we have here, it's incredible. Since 2008, what the world central banks, including the Federal Reserve, have added to their balance sheet, creating this debt bubble, which, Greg, we're starting to see this unfold here in the United States and around the world. What I want people to understand is, and I think this is pretty current, this issue here with Baltimore, this really isn't about the tragedy that happened with Freddie Gray. A lot of those people have no idea who Freddie Gray is. They're just angry because of their socioeconomic situation, which is being fostered and pushed and made worse by the policies of the world central banks, who have been suppressing interest rates. Under this administration, I urge people to do a little research. We have seen the largest wealth gap in American history. Now, these are the people starting to rise up. The triggering event in Baltimore was this tragic event, but there's going to be other ones, Greg. We're in the midst of a collapse now. Look around the world, more conflict, more wars, riots here in the United States. This is exactly what people like you and me and a lot of other people have been warning about for a very long time. And we're seeing it now. People just need to put 2 and 2 together and figure out this is it. This is what's going on here, and we're seeing it. It's going to get much, much, much worse, beyond any doubt.
Well, that's what Ferguson was about. I mean, the reason why the president sent Al Sharpton to Ferguson, and I don't know if he sent Jesse Jackson, but he certainly sent Al Sharpton, wasn't to settle things down. It's to cover up the fact that these people have no social mobility. I mean, the African-American community is twice the official unemployment rate, and the youth unemployment rate is, what, 25, 30%. I mean, there's no opportunity, and all the money is floating up to the top part of the economy. It's been that way since the crash. But I want to get into gold and the dollar. And you're saying the dollar has topped out. You're saying that dollar's topped out. Does that mean gold has bottomed out?
Yes, I believe we are at an actual bottom now because of the action in the dollar. The Federal Reserve is not going to raise rates anytime soon. The dollar will correct. And we've seen this. You and I spoke about this a couple weeks ago. I said, Greg, watch what was going to happen. Watch what's going to happen. I mean, did it play out exactly like I said it would? And it is going to continue. Now, I'm not saying that the dollar is going to fall in a linear fashion, nor is gold going to go up, or silver, or whatever your asset of choice might be, is going to go up in a linear fashion. But we are at that point. We've tipped over, in my opinion here, and we could be now at the cusp of a major bull run with regard to precious metals. Also, depending on what happens over in Europe and Greece too. So all this is like a perfect storm in many ways for the precious metals, against the debt as well. You know my take on this. By holding a hard asset, gold, silver, platinum, palladium, you are betting against that debt. You're taking the short end of that trade. I think it's the best trade in the history of the world. And we're going to start to see a lot of things unfold here, Greg. One way or the other, what happens with Greece, whether they find some miraculous hoard of cash laying around or given some kind of whatever it might be, we have to realize that the end of the debt expansion cycle is upon us. This is a resource issue. This is why we're going to start to see more regional conflicts, more wars, more riots here in the United States. It's a struggle for resources, something and you and I have understood for a long time. I've been screaming from rooftops about this for years now, about how dangerous the situation is with regard to the global debt. And it's starting to manifest itself right here in the United States right now.
Well, you say that interest rates are going to go negative before the crazy bill that the Fed is pumping out is going to end. Might they have QE4 or the next round of QE? Something that a couple of my guests have said that they're going to have another round of QE. They're going to be forced into doing it, and not covertly. They're going to be forced into doing it overtly. I think John Williams is also, that's one of his premises, that things are going to get so bad that going to have negative growth, for all intents and purposes, 0.2%. I mean, we got negative growth if you factor in any kind of inflation, even the Fed's phony inflation. But what do you think would happen if all of a sudden they came out and said, well, the economy is so bad, we need another round of money printing, another round of QE? What then would happen, and do you think that could happen?
I absolutely do think that's going to happen. Before they allow this mechanism that they have propped up, Greg, these distortions that are so extreme to correct to fair market value, because they will at one point, they are still going to throw everything they can at it to keep it going. Because again, the alternative is too horrible to contemplate. Too horrible to contemplate. Again, the world will become Baltimore when the debt bubble bursts. Every street in every nation around the world is going to become Baltimore, as people realize that they cannot acquire these basic assets, and everyone is struggling for these resources. This is what it's all about. They understand this. The world central banks are not stupid. Again, Greg, this goes back to why the police are militarized in every state in the union, why we are one nation under surveillance. They understand where this is going for many, many years. And the mechanism that is in place right now, boosting up the stock market at the expense of everyone else, has caused this massive gap in our economy with regard to the haves and the have-nots. And we are clearly moving back to a two-tier society, Greg. The middle class, when this is over, will not exist, period.
You're giving away your book. I mean, you're Mr. Free. Everything's free. Your site's free. Your trades are free. Your book's free. How many sales have people downloaded for this book? And will you give me a link, and I'll pump out your free book, which you make nothing on, but people get an education on how many sales or how many free downloads have there been, and you'll give us a link.
Absolutely. Right now, over 25,000 copies have been downloaded. I'm really happy to say that. I want people to keep doing that, keep downloading it. Although a lot of the concepts are kind of dated in that book, they do still ring true. So, yeah, you can go to traderschoice.net. It's right on the first page. Ultimate Guide to Money in the Markets. It's 100% free. There's no catches. There's no gimmicks. It's just free. Please download that and read it, and you'll get a real idea and understand, I believe, how things really work.
Gregory Mannarino, traderschoice.net. Gregory Mannarino, thanks for joining us today on USAWatchdog.com and giving us this crisp, pithy update. The world will become Baltimore. That's the title, my friend. Thank you very much for joining us today.
Excellent. Great. Thank you.